Hi, and welcome to our second quarter presentation at Huddly. I'm Alexander, and with me is Ragnar, our Chief Financial Officer. In addition to be presenting Q2, we'd like to use this opportunity to share more information about the company. But first, I'd like to share some key highlights. Revenue came in at 107 million, which represents a growth of 67% compared to same period last year. The growth is driven by our strategic partners, representing 73% of the sales in Q2. The gross margin was a disappointing 39%, a slight uptick from Q1, but 15 percentage points lower than same period last year. Top priority going forward is improving our gross margin levels. Hence, strengthening the channels is imperative. Furthermore, software monetization continues as a priority. In Q4, we will launch speaker framing, a software feature that I'll cover later in the presentation. But moving on, I'd like to take a moment to zoom out. More than 50% of communication is non-verbal. Huddly enables you to capture more of the communication in the meeting room, so that you can focus on collaboration and, more importantly, being present. Our solutions make virtual meetings feel as natural as a real meeting, and perhaps even more convenient. Our technology interprets how humans communicate from voice to body language, automatically adapting to the situation tailored to the ever-changing workplace. We do that by enabling high-quality meeting experiences using smart picture framing, capturing non-verbal communication. Pre-COVID, 20% of Americans reported that they worked from home, which got a boost during the pandemic. Now, more than half of the Americans do all or most of their work from home. In other words, the pandemic was a catalyst fueling an already growing market for us. And speaking of the overall market, the hybrid workspace continues to redefine future collaboration. Kind of a point of no return, but still too early to tell how this eventually will trickle down into new norms. But we are confident that the overall market continues to drive more investments into this space, a direction which favors our current and future product offering very well. What we deliver to our customers in this market is more than just a camera. We deliver a dynamic and interactive video conferencing experience through high-quality cameras with a high degree of recyclable materials. This enables you to engage in socially inclusive meetings. But enough talking. Let's have a look at our latest software innovation, speaker framing. Speaker framing is a powerful new feature packed with AI, designed to make meetings feel immersive and inclusive, an experience typically associated with a high-priced and often complex solutions. This is also where our approach to network cameras will show its full potential. Our goal is to broadly deploy these meeting experiences as software features on the L1 and S1. Since the launch of our first product back in 2017, Huddly has evolved from a single product company to offer a comprehensive variety of software solutions. From home office to large meeting rooms. These cameras are powerful computers that with added software features will cater multiple use cases or scenarios if you wish. To sum up this part, we make camera platforms that are powerful computers enabling advanced edge computing. Our software-defined approach enables enhanced video collaboration experiences. And on top of that, we are developing new features available to add value throughout the product lifetime. Our solutions are well positioned in the marketplace with a strong US footprint, certified with leading technology partners. We sell our solutions individually or are part of kits or bundled through our channel partners. We have experienced strong growth over a long period, with a downturn last year, but we're pleased with the growth momentum this year. Reviving profitable growth is our ambition. However, there's no quick fix. Short term, looking at our year-end targets, we continue to monitor and mitigate as best we can. We aim to strengthen product margins with channels and software monetization into 2023. However, in the short term, the margins will continue to be under pressure. And in the current market climate, with many moving parts and low visibility, our best estimate is that we will reach the low end of the revenue range this year. But I did not start as CEO in Huddly to bridge the year-end gap. We believe 2022 will be a stepping stone to larger opportunity with our well-positioned product offering. The investments we do today in our expanded commercial team, research and development, and partnerships will create longer-term value. Let's go through some operational highlights for the quarter. Our supply chain strategy has proven resilient, but is still under pressure. Component challenges continue, even though we see small signs of improvement. But with the current macroeconomic climate, we expect tensions to continue, perhaps becoming a new normal. Operationally, our team continues to deliver consistently and exceptionally well, despite all of this. The R&D department is by far the largest team at Huddly. Currently, the team consists of more than 70 employees, which represents more than 60% of the overall organization. And in Q4, we are launching speaker framing as demoed earlier, as a first step in our software monetization approach. A feature typically associated with product prices in the far end of the spectrum. We believe this will be a strong differentiator in the market. Our objective is to make these premium features available to the many rather than the few. And during first half of 2023, we're proud to announce that we will be launching our biggest innovation so far, the Huddly Studio, an AI director multi-camera system providing a dynamic and natural video environment for all participants. And with this, we are bending the technology to cater almost any meeting room configuration rather than bending the meeting room to fit the limits of the current technology. A key lever to profitable growth will be to increase channel sales. And this Monday, we appointed Daniel Johansson, our Chief Commercial Officer, to drive our commercial team forward. A month earlier, we strengthened the US team with Mats Bergqvist as our new Vice President of Sales Americas. An important step, as we're currently heavily present in North America, representing most of our sales. We saw a strong growth in the backlog into Q1, slightly lower in Q2. However, not necessarily a direct response to demand, with the backlog stretching beyond 6 months. And we expect a potential softening of supply chain to reduce the backlog. Now, I'd like to hand it over to Ragnar, who will guide you through the financials.
Thank you, Alexander. We realized revenue of 107 million, up 67% from Q2 last year. The growth stems from the strategic partners, while channel sales has been relatively flat in terms of revenue. Compared to last quarter, sales is down approximately 7 million, and channels has a relatively larger portion of the revenue. Realized sales price per unit is up as our IP technology cameras, L1 and S1, are penetrating the market and becoming a larger part of our product mix. We are not satisfied with the growth in channels, and our key priority is to get channels to pick up on the same growth momentum as strategic has seen the last year. Gross margin concluded at 39% in Q2, which represents a slight uptick from Q1 this year, but a decrease of 15 percentage points compared to the same period last year. Our strategic partner sales accounts for 73% of our revenue in the quarter, with lower margins than channel sales. This puts pressure on the gross margin, and the customer mix will play a key role in the making of future gross margins. Further, Huddly's portfolio of cameras constitutes a range of individual product gross margins, from the low end to the high end. Therefore, the realized product mix is a key factor for our realized gross margin. In addition, while we do see continued indications of an improving supply chain with PPVs on a downward trend compared to Q1, the anomalies are still present and putting pressure on our margins. Finally, our direct cost is impacted by increasing inflation, and we expect to continue to do so, putting further pressure on the margins. The increased direct costs translates into higher prices for Huddly cameras in the market. To be clear, we are not satisfied with the realized margins and the channel performance, and it's our top priority to address this performance and improve our margins. However, we do expect to see continued challenges in the second half from a sales and margin perspective. It will take time before we see effects of the strengthening of our commercial organization that Alexander alluded to, and price increases come with a delay compared to cost increases. We had operational expenditures of 32 million in the second quarter, and that is up 167% from the same quarter last year. This is in large explained by increased salary and personal expenses, explained by the 55% growth in employees realized the last 12 months. Adjusted OpEx, excluding option expenses of 2.8 million in the period, has doubled since the same quarter last year and increased around 8% since Q1 this year. We do expect to see an increase in adjusted OpEx throughout the year, however, at a lower pace than previous quarters, as we are focusing on our cost base and have reduced growth compared to what we initially planned for 2022. The increase in depreciation mirrors the increased operational expenditures and is explained by increased investments in R&D the last years, as we are building and developing our technology and product portfolio. The company had a net financial items of 10.4 million, in large explained by currency gains as the Norwegian krone depreciated versus the US dollar in the period. Net profit concludes at negative 1.1 million, down from 7.9 million same quarter last year, but up from negative 11.5 in Q1. We invested 21 million in Q2, an increase of around 40% compared to the same quarter last year. The drop in investments from Q1 to Q2 is typically explained by accounting treatment of salary and personal expenses. We do consider Q1 as a good proxy for the level of capitalized R&D cost for the rest of the year. We concluded Q2 with a cash balance of 257 million compared to 281 million at the start of the quarter. Investments of 23 million in Q2 is down from Q1, mainly explained by salary expense accounting, as mentioned on the previous slide. There were some 2 million contribution to investments from changes in right of use assets related to office rent. Compared to Q2 last year, the investing activities were up approximately 5 million. There were no financing activities taking place in the quarter. That concludes the financial section, and back to you, Alexander, for a summary and outlook.
Thank you, Ragnar. Needless to say that improving near-term gross margin is our top priority while supporting the growth momentum. We remain confident about the long-term opportunity for Huddly. But we do expect revenue for this year to be at the low end of the range at current FX. Similarly, the gross margin will be at the low end. Furthermore, unless we see an improving visibility, we might reconsider our guiding principles for the coming periods. We have 4 key priorities going forward. 1. Drive margin and revenue by leveraging channels and software monetization. 2. Strict cost discipline, following the reduced growth plan that was initiated earlier this year. 3. Continue to mitigate supply chain risk. 4. Further strengthening the organization. And with that said, I'd like to thank you all for listening in and hope that you will come join us for the Q&A. Thank you.